Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis for the Forex market from the ForexPeaceArmy.com. We'll continue to talk about the euro currency today, and we'll start as usual from the daily time frame. Well, in general, I have to say that the larger time frames such as weekly and monthly time frames do not definitely clarify and explain the most probable direction of the market, because as monthly as weekly time frames have a lot of contradictory signals, as bullish as bearish, so that are not allow us to make some definite decision and conclusion about the future development situation of the euro currency, at least in the nearest term. That's why in such kind of environment it makes sense to shift to the most recent swings on the lower time frames and to trade market with the short-term targets and the short-term time frames on daily and 4-hour hourly time frames. And that what we discuss will be particularly discussed today. Well, on Friday we have discussed this pattern. This was a potential stop grabber pattern that could lead to taking out these highs, and market has held the trend bullish during the Thursday price action, but bulls hasn't used that the advantage, and market has totally erased this pattern, has shifted trend to the bearish. As you can see, daily trend now is bearish, so this scenario has failed. What we see now, daily trend is bearish, price action also is bearish, so you can see nice thrust to the downside candles and so on, the high close on the low, open on the high close on the low, and so on. And that tells us that probably we could focus on the short-term trading, on the short-term on the short side trading, and trading on the short side of the market. Well, but currently market, as you can see, has hit the target, 618 target from this A, B, C top pattern. That also agrees with the 786 support from this low to this high. This is 786 support. So that could lead to some retracement in the market, and that we could use the to enter on the short side of the market. The potential targets of this further down move could be first target stands right here. You can see this line, dash lines 140.78, this weekly pivot support 1. Also be careful with the 141.20 area. It's right here, because this is, I do not have it on this chart, but this is the monthly pivot support 1. The bit extended target from that ABCD pattern 139.34. It's right here. It's very close to the daily level of reversal. So this will be a bit extended target, and if market will accelerate further to the downside, then probably we will return to speaking about that. But for the beginning of the week, the Monday and Tuesday, the nearest target is supposed the weekly pivot support one. It's right here. Now let's take a look at the 4-hour chart. The 4-hour chart, what do we see? If market still will show some retracement to the upside, then the nearest target to watch for, the nearest area to watch for is the weekly pivot point 143.12. Okay, it's right here, and for our confluence resistance 143.18, 143.37. That's the most important area in the beginning of the week to watch for to establish our short position. You can see that although daily 4-hour trend has turned bearish again, but in such kind of environment, it's very choppy price action, the behavior of the trend is not very important. Also you can see there's some kind of bullish divergence, okay, but this is not a very big deal currently. All the major importance is that area. What I prefer to see here, first of all, I prefer before entering on the short side of the market to see probably wash and rinse of that highs around 143.50. Why? Because as you know, this could be, looks like the double bottom pattern. Okay, consider first bottom, retracement, second bottom, and clear out of these lows. This very typical for the double bottom patterns. Now, if market will show retracement to the upside, as you know, the classical approach to trading of the double bottoms, the taking out of the highs of this between the bottoms. Well, when the market will accelerate above it and take out these highs, the public will enter on the long side of the market due to this pattern, and the wash and rinse will trap the public with their positions and the long positions, and when their stops will start to trigger to the downside, market could accelerate lower. That's why I prefer to see the wash and rinse before enter. This could not happen, but this will happen, probably will not. But if it will happen, and if we'll see the wash and rinse, this will give us the more confidence with the entering on the short side of the market. Well, on the 50-minute chart, what do we see? Also, look at this pattern A, B, C, bottom. This is, by the way, ABC from that candle. Okay, if you take a look on the 50-minute charts, you will see this picture. You can see that the 100 extension target from that ABC pattern stands precisely at the same area, 143.28. Makes an agreement with this confidence resistance and weekly pivot resistance 1. So that's my current view on the situation on euro currency. I think that in the current trading environment and such sharp price action on the weekly and monthly time frames, and with unpredictability of macro data and fundamental data, because current month will be very important from the in-depth selling on the United States point of view. But with the non-farm payrolls, poor numbers, and European Central Bank rate hiking, is probably could be very choppy price action. So I think that we should focus on the recent short-term swings, establish the nearest short-term targets, and concentrate on the trading intraday sessions. Okay, from that point of view, I think that on the Monday we should keep an eye on that area and watch for the sell signals in that area. The wash and rinse of these highs will be the perfect pattern that will allow us to enter on the short side of the market, with the target, I suppose, around the daily time frame, the weekly pivot support 140.78, somewhere like here. Well, just one caution to you: if market will break the weekly pivot point that area to the upside and hold there, do not enter short, because in this case market will confirm the double bottom and double bottom pattern, and will stand above the weekly pivot point. This could lead to the deeper retracement to the upside, probably to the weekly pivot resistance 144.50 area, or maybe to the 618 resistance, who knows. But in general, this will be not the situation when we should enter on the short side of the market. We need to see the taking out of these highs and fast return back, preferably even below the weekly pivot point before entering the short side of the market. That will be our perfect scenario. If it will happen, that will give us confidence to enter on the short side of the market. If market will break it to the upside, hold there, then don't enter short. Wait for the more confirmation and other clear signs from the market.